Mortgage Bankers Association, National Association of Realtors, Goldman Sachs, Freddie Mac, Morgan Stanley, and Bankrate. What do these national brands have to do with the Roseville real estate market? Well, they're all making their predictions on what the national real estate market will look like based on the mortgage interest rate. Between all of these companies, they're predicting somewhere between a 5.5 and a 6.4% interest rate by the end of 2023. Now, what does that mean for you as a home buyer if you're thinking about purchasing a property sometime soon? Not a whole lot. Here's what I mean by that. When you're purchasing a home, of course you're keeping in mind what your affordability is and what your monthly payment is going to be. But the reality is that you're purchasing a piece of real estate, a piece of property, and unlike almost any other thing that you're currently paying a monthly payment for, this property is going to appreciate in value over the next 10 years. Think about that. How many of us sign up for a new car payment because we need a new vehicle and we're willing to take on whatever payment and interest rate is available at that time because we need a new car, and knowing very well that that car is absolutely going to depreciate to zero. Most vehicles, unless you buy some sort of classic car or really work hard on it, is going to appreciate to zero over the next 10 to 15 years. Or very, very small chunk. I'm looking at a new SUV and man, I really want one. And I can afford the monthly payment on one, but man, my SUV right now, it's paid off and it does what I need it to do. And it gets me to soccer practice and baseball practice and it gets me up to Truckee in the snow. And the new one is $100,000. And I can't afford to just let $100,000 go down to zero and just watch that money waste away over the next 10 to 15 years. Well, the good news for you if you're watching this is that you're probably more interested in real estate, especially in real estate here in Roseville. And over any 10-year period in Roseville, home values have appreciated. If you bought at the absolute worst time, the peak of the market, 10 years later, your home was worth more than it was when you first bought it. And all the while you're making principal payments and you have equity built into your home. Versus if you purchase a car and you make those payments, you don't necessarily retain the equity because the car is only worth what it's worth at the time that you go to sell it. That same $100,000 car might be worth $20,000 in 10 years from now if you're lucky, yet we're still hesitant to move forward with purchasing a new home, aren't we? Yeah. I get it. The interest rates went from 3.5% up to 7%. And now we're talking about rates by the end of 2023 being somewhere in the 5.5 to 6.5 range. Not too far from where we're at right now. But you know what method really works in real estate? Buy a property that you want. Buy a property that you can afford at the highest form of interest rate payment, and then wait for some period of time because eventually rates will fluctuate. You know what's always happened over a 10-year period of time in real estate? Property values have gone up and rates have fluctuated. So if the worst case scenario is that rates continue to climb up, but you locked in a property today, then you're locked in. Real estate is going to continue to appreciate in value. Prices are not going to go down from now to 10 years from now. At least they haven't ever in the past. So why would they now, especially when we're seeing historical lows in regards to housing availability? But interest rates have shown a pattern of fluctuating over a period of time. So the reality is that if you buy now or buy when you're ready and buy when you can afford that monthly payment, and you find the house that you want and you're gonna hold on to that house for at least 10 years, at some point over the next 10 years, you will likely have an opportunity to refinance your property and get that lower interest rate and ease up a little bit on your monthly payment. Now, it's not a guarantee, and there's nobody, even Bankrate and Goldman Sachs and Morgan Stanley and National Associate Realtors and Freddie Mac, none of them know for certain where the rates will be. But we can say for certain that values will be higher than they are today in 10 years' time. Now, to prove my point, especially for real estate here in Roseville, I want to talk about the last great month in real estate, the peak of the market before prices really started to go down during the Great Recession of 2007-8. So in Roseville in 2007, the peak of the market, that was June of 2007, and the median sales price was $430,000. Now, we all know what happened next. We hit a massive recession. It's the first time ever that housing prices completely crashed during a recession, and prices came down big time. Basically, right after June, July, they started to just slide down here in Roseville. So here you are, you just purchased a home in 2007. The X factor being that you could have maybe purchased a home with adjustable mortgage rate. You're not locked in for 30 years, so your rate is going to change drastically sometime soon. But let's just assume that you locked in a fixed rate mortgage at whatever the rate was. Fast forward 10 years to 2017, which by the way was not a fantastic year in real estate. It was pretty good, but not great, especially here in Roseville. In 2017, in June of that year, the median sales price was $448,000 in Roseville. Now, we're not talking about record-breaking years here. Over that 10-year period, having gone through the absolute worst downturn ever in the history of real estate, you still managed to walk away with a slight bit of profit. All the while, you're making principal and interest mortgage payments and you're paying down the mortgage. So you actually have quite a bit of equity versus that car that I talked about that you basically don't have any equity in. Now, along the way, could you have refinanced when rates got lower? Yes. Could you have saved a bunch of money off of your interest payment? Absolutely. The bottom line is that your property increased in value over that period of time. So what I would challenge you to do today is think about when is the right time for you to purchase a home based on the needs of your family. Can you afford that home? Is your job stable? Do you have any sort of things that are coming up that might make you pause or concerned about the future in terms of your ability to make that monthly payment? If so, then we need to reassess your priorities, and if not, then it's time for us to put a look out there for what properties might fit your needs and keep an eye on them, because there's not a whole lot of homes to choose from right now. Most likely, we're not going to see a massive crash in pricing. Most likely, we're going to see flattening of interest rates. Most likely, over a 10-year period of time, we're going to see home values increase. And it's highly likely too that over some period in the next 10 years, rates will come down even more and you'll be able to refinance and save yourself some money on that monthly mortgage. So this is not me as a real estate agent telling you that right now is a great time to buy. This is me telling you that if you can afford to buy and the right opportunity becomes available, it's okay to do it. Don't hesitate thinking that sometime down the road, some incredible opportunity is going to become available, because time shows that when you buy and wait, you can be successful. But if you wait to buy, the opportunity will pass you by. Hey, I'm Jeff Goolsby from the Goolsby Group. It's my mission to help people win in real estate, and I've got a massive amount of data that I rely on when it comes to real estate here in Roseville. I know what homes have sold for, I know what interest rates have been, I know what concessions have been offered by sellers in the past, and we can put together a strategy that will help you become successful when it comes time for you to buy a home. So, hit me up, let's put together a strategy session if that's something that you're passionate about, and if not, and you just want to track the market, that's totally cool. You should check out some of our other videos where we've talked about what the real estate market is doing here in the Roseville area, and I'll be ready to serve you when the time is right. Thanks for watching this video. I'll see you on the next one.